Yo. Good morning, traders. Good morning, everybody. YN Catherine, good morning. Dean, good morning. Ash, what's going on? Welcome. Hello, Dean. Good morning, Silver. Live. What's going on, everybody? Good morning. Hello, and welcome. I hope you guys are ready for a great episode of Market in the Morning. We're going to cover some S&P 500, NASDAQ, gold, some key headlines that have come out recently. And as you guys see in the title, some things have really been happening with the yen, which is going to end up becoming a domino effect and impact other markets as well. So guys, smash that like button if you're ready to make some money. Market in the Morning starts right now. All right, ladies and gentlemen, let's get started on some S&P 500 futures. We'll roll over into some NASDAQ. We'll cover some gold and anything else you guys want to cover as well. So definitely drop it in the comments. Drop a good morning. Say what's up. Drop some W's if you're ready to make some money today. So first things first, S&P futures steady near highs as Fed independence and Hormuz ceasefire support risk. Now, we were seeing a little bit more of a bearish situation due to the whole Trump being able to possibly fire people of the Fed. So we got to be careful in that sense. When we're looking at our market terminal, it is still giving us a slightly bullish target. So we have a bullish target level of 75.60, support around 74.96. This looks like a great area of support. If we're looking at our market chart right here, we see this is where we were creating some higher lows, higher highs. And look how cool this is, guys. You go to different time frames. So look at our chart here on S&P 500. Very simple. We caught this nice move to the downside yesterday on the NASDAQ, as you guys remember. If you caught it on ES, congratulations. That was another nice play there too. But we had a reversal. You guys remember we had that huge sell-off, and I mentioned, be careful we don't just reverse from here and we don't just pull back, right? Markets have not been giving us conditions that give us a trend, a pullback, and then continuation. It's been more of a two-leg trade where it gives us a drop and then just a straight up reversal or a pop and a reversal. So keep that in mind when we go into today's session. Right now we see we are pulling back towards 74.96. That is an area of support. If we do start failing, we might see the same setup play out where we find a lot of selling pressure, move on lower, and then find some support to move right back higher again. So that's something that I'm going to be keeping an eye on the S&P 500. And we could roll down here to our bias and calendar events just to see if there's anything coming up today, which there is consumer confidence. Yo, good morning, Ozzy. What's going on? U.S.-Iran ceasefire and Doha talks ease Hormuz tail risks. Global chip and AI mega projects reinforce secular tech earnings growth. So something to keep in mind when it comes to big tech and when it comes to all these companies. Yes, big tech is having more growth, but we're starting to see a limitation in some of the AI sector. And when I say limitation, I don't mean, oh, AI can only go so far. No, AI can keep going and going. That's the best part about it, right? Artificial intelligence, it's going to keep expanding and keep getting better and better. Claude, as many of you know, is an AI system. Claude released a new model. Models are like the versions of AI, and it was called Fable. And it was so advanced that within a few days, the US government stepped in and had it shut down. That's how strong Fable was. So keeping that in mind, yes, AI will continue to grow, but where is it getting capped? Well, it's going to be getting capped in sectors like memory chips. Memory chips are going to get more expensive. Computing data. These are all things that are part of the AI infrastructure that will eventually start to roll over and have the AI models hit a wall, have all these big AI companies that are showing big revenue start to stall out because now they're going to have to dip into their revenue and use some of that capital to purchase more memory units, purchase more chips, more data centers. All of this is energy. Everything's going to snowball at some point, and that's when we're going to see a lot of pain in the AI sector. So let's take a look now as well. So dollar strengthened and yen's 40-year low heightens forex volatility risk. Now, I mentioned before that if one market does poorly, a lot of times it could snowball into others. When we see big countries like Japan, and they're seeing a lot of selling pressure, they're seeing some uncertainty and worries, they're going to then end up being forced to sell their US stocks. What's that going to do? Well, they're not selling $1 million worth, they're selling billions of dollars worth. It's going to have a stronger global impact. Now, let's take a look now. We have our breaking news tab and see if anything came out. Strong dollar pushes yen to 40-year low as clock ticks on intervention. Guys, let me know in the comments, do you think we're going to get an intervention? Percent eyes gasoline retailers. Iran says Tehran is determined to maintain its right over the management of Strait of Hormuz. Now, when we started this war, it wasn't so much, oh, we need that Strait of Hormuz. It was more so, hey, we're starting this war, we're getting involved, we want something in return. At some point, it became the US looking for authority and possibly fees from using the Strait of Hormuz. We're really running into that blockade ourselves right now, where Iran is saying absolutely no way. So we want to keep an eye on that, especially because peace talks are going on. And as you guys saw yesterday, we covered headlines that said the US attacked Iran again. So in terms of a peace talk, in terms of a ceasefire, in terms of the war ending, it's still not over. As big of a headline as they put out saying we're having peace talks, full ceasefire for 60 days, peace plans in place, it's still not happening yet. Markets are starting to digest this. We do see oil returning back to levels we haven't seen since beginning in late March, which is around $70 a barrel. We could cover oil as well, because now, I don't know if you guys remember this, but last Wednesday when we have Imre on, he mentioned that he thinks oil is going to pop one more time due to the whole supply deficit, right? There is a big supply issue going on. So we could come over to oil and see what's really supporting and going against this bias. Yeah, more pain coming for JPY, and it's just going to domino into the US market as well. Just like we saw the Korean markets had like a 10% drop. They even got halted. And then, boom, what happened? New York session ended up feeling that pain. ES and NQ, US equities felt that pain. When one market collapses or crashes extremely strong, it usually has a ripple effect on the global economy, just like we've seen with oil. So what supports the bias on oil? War risk premium largely priced out as ceasefire holds. Trump-Iran Doha talks. So these are all sort of the same headlines we saw on the ES, but how it impacts oil is not bullish. It impacts oil to the downside because it's supporting less war talks. Things are easing. Things are coming back to normal. So just something to keep in mind. We do have consumer confidence today at 10 a.m. Let's check our economic calendar and see what we can expect going into that. So 9 o'clock, we have Case-Shiller. This is not anything that's massive. We have Chicago PMI. Yeah, what's going on? Somebody said, hey, could you look at Bitcoin? As Sailor says, we'll have to sell Bitcoin. A nice drop should come again. But that target could be for a max buyer's pain. Yes, exactly. We're going to be seeing a lot of pain in areas like Bitcoin. Let's cover the economic calendar real quick, because we actually do have jolts and consumer confidence today. So we do have some big economic events. Sands, what's going on? Ted, hello. Welcome. I also saw you had a question or a comment as well. We're going to run through those right now. Guys, what a great and strong community we're building here. Absolutely love you guys for joining every day. Great show, great guests, great hosts, and great engagement. It's a team effort, ladies and gentlemen. Chicago PMI is at 945. Now, this is not something that's really going to impact the market or give us one of those wild moves. It might give us a little bit of volatility, a small wick, nothing major. This is not a CPI event. This is not a non-farm payroll event. This is something on the lower scale, so we're going to not ignore it, but at the moment dismiss it, not give it too much attention. It's cool and it's important to be able to recognize which events actually move markets and which ones don't. Now, consumer confidence, on the other hand, forecast and bank forecast are 94.8. Prior was 93.1, minimum is 92.5, and max is 97.6. So the main thing we want to watch when consumer confidence comes out is where we come out on the actual in regards to the minimum and maximum. Are we within that range? Are we near one of the extremes? If we come near or above one of the or below one of the extremes, we're going to see a strong move in the market, a strong reaction, and could lead to a bit of a trend day today. We do want to be extra careful. It is Tuesday. Non-farm payroll is going to be on Thursday. And guys, don't forget Friday, no market in the morning, because on Friday we have it's a bank holiday because July 4th falls on a Saturday. So they're going to be making Friday, that bank holiday, pushing over in observance of July 4th, Independence Day. JOLTS job openings is also coming out today at 10 a.m. Key input for central bank rate decision signals overall economic strength and trends. High impact released often moves currencies. Prior month revisions can amplify the initial reaction. And it looks like market is expecting it to come out at 7.38. So we'll see how close that comes. And I also want to see consumer confidence. How will that impact the ES and NQ? Well, right now their forecast is 94.8. If it's above, that would be bearish on our US equities. If it's below, that would be bullish on our US equities. So that's how we'll be keeping in mind on that. Yo, good morning, guys. Famous Sans, Safe, good morning, everybody. Hope you're all doing well. Happy Tuesday, man. We're going to make some money today. Guaranteed. All right, let's check out Bitcoin. I know somebody was asking about Bitcoin, and the best part about market is you could check all these different assets. Do I have Bitcoin on my list? Of course I do. So Bitcoin right over here. Let me just turn some stuff off. There we go. Beautiful. And what's cool too, guys, is this chart is pretty customizable. You could turn off the labels. You could turn on and off the scenarios too, which is pretty cool. The news feed you could hide if you want to see just the full chart. And you could also add drawings now. So if you wanted to see what a short position would look like from this level, you could draw out that short position. You want to see a long position, you could do the same thing. So very cool there. Market team's always killing it. And now let's look to delete that. Perfect, guys. Easy peasy, lemon squeezy, right? So Bitcoin's still looking more to the downside. 58,000. We've been talking about Bitcoin on the show for a little while, and I've been telling you guys that I need to see Bitcoin below 60K. It's going to start giving us a lot of pain. Well, we're below 60K. We're at 58,000. And look at this chart. If you're looking at this chart and you're a beginner trader, the first thing you recognize is this is clearly in a downtrend, right? We're moving lower. We made these all-time highs over here at, let's see, that is 126,000. We'll call it 126,000. It is now currently at 58,000. So if you take your measurement tool and see where we are from those highs, we are currently over 53% lower from those all-time highs. Now, to consider something in a bear market, it would have to be below 20% from its all-time highs. Bitcoin is far below that. 20% is all the way up here at 100,000. So is this a great buying opportunity for Bitcoin investors? Yes. But you don't want to just be buying blindly. Right now, this is still looking and considered like a falling knife. You mentioned there's got to be a lot of pain for the economy to come back to a more sustainable level. So that's what we're going to be keeping an eye on. Yes, sir. And the lab's going to be joining us very shortly, guys. In the next 20 to 30 minutes, he'll probably be joining us by 9 today. So we'll run through some charts, run through some levels. Nil will join us, give us some great trade setups on gold. It's the way the cookie crumbles, ladies and gentlemen. Great stuff there. Now, something I always like to look at, whether I'm looking at Bitcoin, gold, S&P 500, even if I'm looking at an equity like Meta, Google, Apple, is I want to look at those previous lows. And when was the last time price was at these levels? And we see the last time price was at these levels was back in 2024. Your market doesn't have the drawing tool option. It might be on our end. So let's see. Might be a soft launch. So we'll keep an eye. We'll see when Nil joins, what he has to say about it, and we'll see how quickly you get that live for you guys. So we have 58,000 right down over here. This was October 2024. And then we have, look at this pivot, right? We always look for those lonesome levels. This is a lonesome level. The last dip Bitcoin had to 49,000, below 50,000 after it made an all-time high of 74. So it came back below 50. Liquidity sweep right there. A lot of pain in that short term. And then boom, we exploded from that level up 157% to those all-time highs. And now here we are again trying to push those levels. I would love to see Bitcoin back below 50K. The amount of pain and liquidation and forced selling that would occur at that point would be phenomenal and a great buying opportunity. Again, there has to be pain for people to have gain. That's going to be our pain level, 49,000 right there on Bitcoin, guys. Great levels, great call out there. We could even look at what's supporting and going against Bitcoin. Record US spot Bitcoin ETF outflow signal institutional selling pressure. So not only are we seeing a bear market on Bitcoin right now, but now we're also seeing strong US spot Bitcoin ETF outflow. Spot is the ETFs. So if big institutions, these billion-dollar corporations, are selling Bitcoin at rapid pace, maybe we should be a little careful, right? They're known to be right more than wrong. So we don't want to be, again, catching that falling knife. Let Bitcoin cause more pain. Let things move lower. Let Michael Saylor get hurt real bad on his portfolio, on his position, and then we'll see how things play from there. Michael Saylor's strategy prioritizes up to 1.25 billion Bitcoin monetization, new corporate framework allowing significant Bitcoin sales for cash reserves and buybacks, introduces potential large discretionary supply. So he's, again, forced to sell a bit here. He's forced to sell his Bitcoin for cash. A lot going on, man. A lot going on. Somebody said DJI, which would be our Dow Jones, right? So we could take a look at our Dow. Let's see. So Dow is going to be the YM, right? So YM is the futures of the Dow, because obviously YM and the Dow go hand in hand. I wonder how they got that. They got YM from Young Money, guys. Dow futures firm has Fed's independence holds. U.S. data is in focus. So again, it all comes down to our U.S. equities right now. We're going to be keeping an eye on range-bound price action, just like we've been seeing. But that's because we know, because we're using market, that markets are waiting for that institutional data to come out, that economic data to come out, non-farm payroll and unemployment this Thursday. This is going to be a huge event. We've been going months and months before where we were getting data and it was just giving us sort of back and forth, not too much information. But now at this point, we even see, and what's cool, guys, we could come down here to our rates in central banks. We see that in July, 80% chance of no change. That has dipped significantly. At some point, it was at a 93% chance of no change. Now it's at an 80%. September is at a 67% change right now, and October is also 64%. So we see that things are starting to change to the bearish side. Now, hawkish would be more of a bearish S&P and NASDAQ. And we know this because last year, when Feds were expecting interest rate cuts, we were getting very bullish price action. It was a lot of optimism. Always circle back to those emotions of the markets, guys. Optimism, uncertainty, and surprise. This Thursday is going to give us some insight, and it's going to give us an emotion. It's either going to give us a surprise that it's above or below expectations. It's going to give us uncertainty if it comes in within an expected price level, and we see that, okay, this helps push rate hikes on the table, which is not good. So that uncertainty will lead to more selling pressure, or it'll give us optimism and it will come at a better level. I'm selling the house, Kev. Let's go. Bitcoin, bro. Let's do it. Listen, man, if you believe that Bitcoin is not going to zero, I always say this about anything you invest in, anything you put actual full money into, that you're okay with losing, because that's investing. That's part of the game. Excuse me. When you're buying something, you have to have confidence that it's not going to zero. Bitcoin, do you have confidence that it's not going to zero? Okay, if that's the case, then just like gold, just like silver, Bitcoin has never historically made an all-time high. Here we are when it made an all-time high of 69,000, and then it sold off all the way down to 15,000, a 77% drop. That is massive. But what's it end up doing? All those people that were selling, look at the volume that came in on this day right here. Volume is also going to give you that sign of a reversal. Mega liquidation, massive pain, but that ended up being our bottom. From there, we moved 375% to the upside. That is a massive, massive move. And then look at that. It continued from there. Had you bought those lows and held to new all-time highs, 700%. So instead of trying to buy highs where you could be subject to a ton of pain like this, buy lows, right? That's where the whole saying comes from. Buy low, sell high. So that's what I would be keeping an eye on Bitcoin. Take a quick look at the Dow right now. Dow is showing a lot more strength than the rest of our US equities, ES and NQ. Now let's take a quick look at our market terminal and see what exactly is going on with our Dow Jones. Supreme Court ruling upholds Fed independence under Cook. You guys remember those headlines that came out yesterday? And if you don't remember, we'll come over to our high impact and look up Cook. Cook is not cooked. Trump was trying his best to get Fed Cook fired, but Supreme Court rejects Trump from firing her. So showing that the Fed independence is still there. Thank goodness. The Fed should have complete independence from the president, from the government. The Fed should be its own area. Supreme Court rejects Trump's unprecedented bid to fire Cook. So very strong, very good there. Yeah, Trump was trying to cook. Yeah, that's a good one, man. I like that. All right, so that was the Dow. That was some of the levels and some of the headlines. And tech and AI led rebound channels, fresh inflows into U.S. equities. What else we got? And guys, don't forget, Nalab's going to be joining us very shortly. Go over some gold. So guys, let's cover some S&P and NASDAQ before Nil joins us, and then we will get started. So let's cover some levels, and we will bring us to our ES and NQ chart. And let's see. So guys, man, look at this, man. We had those shorts up in supply, dropped. We had all these liquidity levels we were looking for. Remember, guys, what I was teaching you, low-hanging fruit. All of these higher low, higher low, higher low, stacking on top of each other. The major liquidity run. We ran through that liquidity, picked up that volume, and reversed to new high of day from there. 93 points on the S&P 500. That is a huge move on the S&P. Right now, something I'd like to mention is, yeah, we reversed, but I'm not seeing much support form. What I'm seeing also, and what we're all seeing right now here on the daily time frame, is look, this is a bit more bearish now. We went from higher highs and higher lows, higher highs, higher lows, higher high, and then what do we get? We got a big non-farm payroll event, just like we're going to have in a couple days, and it made markets shake. It made markets crap themselves. We dumped 230 points on the S&P, 3% in a single day. Wild, wild move from there, guys. Now, what we do? We ended up taking out the recent higher low, which makes a lower low. So we made a lower low after a higher high. We pulled back. We created a lower high. So now what we would be looking for is we'd be looking for price to come back to this 5% level to make a lower low. At this point, we are seeing a little bit of support right here on the daily, where we have our basing area, a strong rally. But here's something I'm glad that we're seeing right now. Guys, make sure you run that like button up, man. Our goal is 50 likes every YouTube stream. Don't forget, follow me on social media. X is Trade with Kev. Instagram is Trading with Kev. Post daily content. I'm going to start posting a whole lot more trading psychology, 10, 15, 20-second scripts. Very easy, very happy to understand and break down for you guys and get you guys on the right track. Now, looking at the S&P 500 here, look at the lack of volume we're seeing. We see that we had all this heavy volume coming in, non-farm payroll, heavy volume, selling pressure, heavy volume. We started to pull back here, but that volume wasn't as strong as the selling. So what happened? That pullback failed. Now we're seeing the same thing. Heavy selling, we start to pull back, but that pullback volume is very low. This candle right here, look at this green candle right here. So this is our big daily candle from yesterday, this big rally we had yesterday. But where's the volume supporting that this is a real rally? Where's the volume showing that buyers are truly trying to support price from here? We are not seeing that. We'll update our previous day high, our previous day low. And let's also mark out some key levels. Now we can break it down to a 4-hour time frame. I'm a big fan of top-down analysis with some supply and demand to find my key levels and find, like Nalab was mentioning yesterday, our major points and our edge. My edge is supply and demand mixed with some order flow for entries. So 2-hour time frame we're looking at over here. And right now what I'm doing is I'm looking at any area that has a major pivot, whether it's a low or a high. I want to see where is that recent area that sellers had control. And I see on the S&P right now, at least on the 2-hour, a recent area of resistance is 75.80. So if we can manage to stay above 7,500, I would look for a move towards 75.80 as a price target. Hourly time frame, we could see if there's any support. Now, something else I want to mention, guys, we had this resistance level for the past week. This is since last Tuesday, so this has been a full week now. Now it's finally Tuesday again, but we're above that level. So this 74.75 to 74.98 is going to be my line in the sand area that tells me, okay, if we're above and holding this area, that's support. I want to look for a long position from this zone and see if we could trade our way back higher, right? We always talk about markets positioning going forward or going into an event. Well, we might possibly be seeing buying going into the market, S&P and NASDAQ, before we get a major dump on non-farm payroll. So something to keep an eye on there. And something else I note, with this climb higher, we did not create any new support down here. It was just pure chop. So that tells me that buyers were not positioning themselves strong enough to support this move. So using this area as that line in the sand, if we can break back below 74.75, I would have no problem looking for shorts below that zone, targeting, again, that previous day low. We already took out previous day high. What's great with previous day high and previous day lows, it gives us an idea of the range and it gives us an idea of the trend. If we're trading above it with momentum, we want to look to trade into that direction. If we break one side and sell back off into the range, we can look to target that other side. Guys, we have the one and only Nalab joining us. Nil, what is going on, brother? Good morning.
What is going on, man? Sorry for the late start. Hope you've been doing good.
All good, man. Yeah, we're killing it, man. We got some levels marked out. We went over our market levels, some headlines. We're cruising, bro.
Amazing. I hope you're feeling better, man.
I'm getting there.
Good to hear.
Thank you, bro. Thank you, man. How are you doing?
Awesome, man. Just attacking the day. Lots went on overnight. ES played out to our target that we were talking about in our trade idea. I have my screen up. If you remember the trade idea we marked up right here while the market was sitting right over here, we were talking about how we could look for this pullback into this area, stops below this wick. Stops below this level over here, just a little bit into this. We wicked right down into here. Would have almost taken the stop loss, but this is why you let your trades run. This is why you don't intervene. And you can see how quick that reaction was. So we pushed up and we pushed up to our target. Now, Kevin is saying we could push down to the day lows if we break back below. That's quite possible. I would look for something, and he's saying that because for the long-term intraday buys to then play out, buyers to jump in. So given that wherever that retracement does go, but I also do expect some sort of pullback, because this is like, you know what I mean? Like trying to buy from here is just a bit illogical. Like I love when the market does its thing, does what it needs to, does these massive moves where these volatility, where everybody gets shaken up and I get to stare at the charts like all excited like a kid. Where's my entry? You know, when you see that, you're just like, wow. And it's similar to gold. It's that if we check out gold and we watch what happened to gold just overnight, gold created a new low, right? Gold broke below these prices at 39, created a new low at 39.43.
Wow.
Now, gold just went deeper into this demand zone that we have to the left in this daily higher time frame area, right? So we were talking about it, that gold is still bearish on the intraday time frame, right? We know gold is still bearish on the intraday time frame because of what's going on over here, right? Rising U.S. inflation, Fed kept on hold by firm inflation and resilient growth, Hormuz Strait closure, historic weakness in yen amplifies US dollar. And so all these factors are still pushing gold down. Now, this is where you don't want to be a little chump in the markets. Is when you see gold or the market breaking such intraday lows like this, the last thing you want to be doing is selling, because we don't sell low. Selling at an intraday low after months of selling is probably the most idiotic thing that you could do. And it is not logical at all, because of the first thing you were ever told when you started trading was do not sell low, always sell high. Now you can see how selling high always has a higher probability of playing out. And then at the same time, buying low has an equal or less probability of playing out, as it's not too aligned with the trend, but still, it's just logically, markets are just a transaction between buyers and sellers. Price is just a reflection of that, and the markets are always efficiently pricing in the correct price. So now gold creates a new low. Sellers take profit. Sellers from 3100 take, 4100 take profit, right? You get lower time frame structures starting to shift. You get that initial reaction. You get the higher low form. You get the higher low form here, here, here. And then would you look at that? We're back above those prices. But this is because this is just a transaction between buyers and sellers. And now all, like I mentioned yesterday, was that it's end of the quarter. The moves aren't going to be as clean as we saw over here. You're going to get a bit more of these whipsaws where price looks like it could pull a bit higher, doesn't pull higher, goes down here. And then now we're back at this area. Now, how do we trade this? How do you trade when there's end of quarter rebalancing happening? Well, the point is that if you don't see anything worth trading, it's never good to force anything. Okay. So now when I look at gold and I look at my levels, I'm like, okay, so we tried to push below. We came but right back up. We closed right back above this key intraday area to my left, where we previously had buyers come in here because of PCE data. Overnight, we retraced, sellers exited here, buyers stepped in again, defended this area. And then we got market pushed up to 4100 price handle. After we had that, we had lower highs print since market open. Had this lower highs print, lower lows print, lower highs. And then we pushed straight down. By the way, Kevin, I think I'm also getting sick, man.
So, bro, I hear that.
Yeah. I also think I'm getting sick. I'm having a horrible time speaking right now. Oh my God, bro. But do you need to wrap early? Anything for the show, you know? Anything to put on a show. So we had this since market open. I talked about my buy attempt at 40.25, thinking that we'd get some sort of higher low situation. It didn't play out. And the sells from 40.50 that we talked about played out instead. Excuse me. I did another buy attempt at 4K just because it was a very key psychological level. I got in right at 4,004. So instantly I was risk-free. And that didn't play out either. So I took half a break-even position. The other half, I took a loss on this. And now what we've seen is we've come right back up. But we've come back up from creating these lows. We are just reacting here. We've done a pretty significant push back above these price levels. Now we are just we did a double top and price is at this key sensitivity area. If it breaks this, you know, it can come down, squeeze down to 4K. Then you watch and see how price reacts at 4K, just because we got to be a little cautious as price did just snap back above this area. So 4K or even 39.75 could be those rejection bounces. And this is where I would be careful. It's because it's end of the quarter and I don't want to be aiming to take a sell that can ride down to 39.26. Yes, maybe we'll get there, right? Like maybe we'll get there over the course of the day, or maybe NFP. Before NFP brings us here, let's say unemployment rate comes up, and guess what? Gold goes back into this range. So this is the type of range where you want to exercise more patience and only exude those trades at those significant price levels. Now, if I just pull up a cleaner chart and we look at where those significant price levels are in these intraday ranges, now I want us to focus on the more recent price action that just happened. Just because it's end of the quarter, we have a very significant data week, and it's just best that we focus on the range that price is currently stuck in. So we have these lows over here. You can clearly see that the main meat and potatoes in the range happen at the highs or at these lows, right? Anything in here, I right now do not want to touch if I'm an intraday trader, because right now positioning is not that great on either side. You can see there's clearly a tug of war going on. We're hitting those low points on gold, guys, that it's like, okay, where are these buyers going to step in? And you can see that it's as soon we're tapping into this area. Yes, we can continue pushing lower, and I think we'll eventually get to 3,900. I do think we'll get there before buyers come in. So it's a matter of where can we see that happening. Now, we have this range towards the downside here, which is a good thing. So if you're a scalper and you see lower time frame closures below this area, then you know that we can potentially start to see the squeeze to 4K and down to 39.75 before we might see buyers jump in for the short term and then drive price down, right? What we don't want to see is for this, how this gets invalidated. If any of these levels that price comes and approaches gets rejected and you see buyers just absolutely respected, in that case, guess what's going to happen? We're just going to end up continuing to range back in here. And in that case, again, you exercise that patience, right? You exercise that patience. You understand that it's not the most optimal conditions from trading. Like, yes, we have a bearish bias on gold, but it's not like we have fresh sentiment riding off of FOMC or fresh sentiment riding off of NFP over here, so that the next week is just filled with pips. It's filled with opportunities. So when you have just a day or two where the markets are not in your favor, or in my case, where I had those attempts at buys and I did not get my sell positioning that I was talking to you guys about yesterday, since I did not get my sell positioning from 4,100, I was taking those buys thinking that we'd push up into here before we got a full sell-off. Since I didn't get those, I'm just going to be a bit more patient, because I know, hey, NFP is on Thursday. Once that sentiment is in, once we get more information on the labor market, that's going to hold weight for the next week. So I know that next week I'll make more money. And what I have to do this week is just take less losses, or just keep the profits that I made, that I got out of the markets, because it's end of the quarter, because I don't want to risk everything that I've made this quarter and put it on red. I want to be more logical. I want to wait for the fresh sentiment to come out. Right now, what has happened on the scale? Okay, so let's just keep these headlines open on the side over here. Israel preparing for possible immediate military operations resumption versus Iran. Of course they are.
Yeah, right.
The war
I thought
is
it was
never
over.
It's over, guys. Yeah. So what has happened so far? Okay. Let's go over some few key points that have really painted the picture in the financial markets over the past two weeks. All right. So let's just move this up a bit. So number one, first thing we had was hot jobs report.
Could you set that to like 40? I think it goes.
Absolutely.
Cool.
Better?
Yeah, perfect. There we go.
So we had hot jobs report, which led to markets hawk. Oh, well, I'll just do hawkish pricing. Okay, hawkish pricing. Hawkish pricing. Number second thing that we had, and this was actually, let's make this number 2, and then the first one can be war escalations, inflationary fears, hawkish pricing. Right? So these were what we were playing for like the past 2 weeks, 2, 3 weeks, 4 weeks, like whatever, the 2 months since the start of the war. And then we recently had the hot jobs report. NFP came out at 172,000 versus a maximum of 125K. So this caused hawkish repricing across asset classes, because the markets went from pricing in no cuts to pricing in hikes. Okay. Now we also had hot inflation reports which also went to, which also priced in hawkish pricing into the market, right? And what I mean by that is that the markets are always forward looking. If data goes against the narrative of rate cuts, what the market is going to do is price in those either hikes or less chances of cuts. Now, markets went to the point where they were pricing in rate hikes, one hike before end of 2026. Now, keep in mind, these probabilities are very sensitive, and the Fed will always play both sides of the same coin. That's called the balancing act game, where no Fed speaker, you'll never see a unanimous, yes, we are going to hike rates. Yes, December is that. They will always play a balancing game because they're balancing the financial markets. If they lean too heavily on one side, the markets are going to go that direction. Yep. If they say, oh yeah, there's no hikes, guys, and they say this in June, what do you think is going to happen by the time it's December? You're going to get markets at even higher prices. You're going to get higher inflation because everything, markets being at asset classes being at higher is also inflationary. Now, hot inflation report would led to hawkish pricing, and keep an eye on gold over here, actually. So see, this is what I was talking about. We have to be careful. Clearly not sustained. We didn't even make it down to 4K. We had this sort of movement back into this range. So see, that this is why we're exercising more patience today. Where we're not just taking every little thing that we can see in hopes of momentum. It's just, let's just wait, see, let the session do its thing. Let NYSE open so we can focus on ES. ES looks way cleaner. NQ looks way cleaner than gold is right now. So I'd rather focus on those until we get more data, right? So hawkish pricing happened. And then what we see now is oil prices dropping to pre-Iran denuclearization, to start of pre-Iran denuclearization. Okay, now oil prices dropping. Lower inflation soon? Question mark. Hawkish pricing reversed? Question mark. Right? Whoa, why didn't that show up? Okay, so now you start to forecast and you're like, oh shit. I'm just gonna make this a bit smaller. So now you start to forecast this a bit and you're like, wow, okay. So we had war escalations would lead to inflationary fears, hawkish pricing. Hot jobs report, hawkish pricing. Hot inflation reports, the Fed was leaning hawkish. Markets were pricing in rate hikes. Oil prices started to drop to start of pre-Iran denuclearization, and Trump is saying they're going lower. What is that going to do to inflation? Does that mean inflation is going to come down soon? Does that mean the markets are going to start leaning the other way? This is what I mean, that the markets are sensitive, that data, it's very data dependent. You'll see countless times Fed's like, hey, we're very data dependent. If inflation starts coming down, if labor market starts hitting that slack, you see unemployment rates shoot up, you see inflation come down. What do you think is going to happen? The markets are going to start pricing in now rate cuts. And what do you think would happen to gold on a higher time frame if markets were pricing in rate cuts? Gold would then, from whatever price it does, and wherever market starts pricing that in, gold would then start chugging its way merrily to the top, as that's what happens when markets are pricing in rate cut expectations. So this is how you start building that narrative of, hey, this is what I'm seeing right now. Oil prices start dropping. This is where we currently are. We're at number 4, right? This is where we are currently. Oh, I hate how that makes it all yellow. So this number 4 is where we currently are. Oil prices starting to drop. Now we have to watch not only for NFP, for how those job numbers come out, but for July, what is it, 14th or 15th, where we have CPI? Well, how CPI comes out and how the next month CPI come out, because that's what's going to be dependent on that narrative shifting. And those sort of data reports is what either changes that narrative or further strengthens the hawkish narrative. And in this case, it's all about pricing, right? The markets are always pricing in the correct optimal price. And this is the most aggressive sell cycle we've had on gold since, I talked about it yesterday, since the rate hike cycle in 2022. And now imagine the markets start leading the other way and start leading towards more cuts. As we know, it's always a cycle, right? It's always a game of balance. Now, over here, we're writing those rate cut expectations. me and Kevin called it out in January. Guys, those are losing focus. The war is kicking in. That's going to be the main focus. And all those rate cut expectations went away. And then we started pricing in those rate hike expectations and inflationary fears causing gold to go down, because that would create sentiment for a more hawkish policy. And now we're at that point where we are just data dependent. And as the Fed always says, they're data dependent. If oil prices start dropping and continue dropping, that means inflation gets lower. And that means that the hawkish pricing gets reversed. And what that looks like on gold, it just looks like gold buys back up to 4,800, back up to 5K. Right? And then we'll be riding exactly how we rode these sells down and we held these runner. We're going to be riding those buys in the same fashion. Every single pullback we'll be buying. Every big sell every big sell retracement, like the buy retracements, we're going to fade out, because we understand what underlying sentiment the markets are leaning on. And right now, markets are still bullish on ES. They're still bearish on gold. So what we can do in the meantime is just short these key areas until we see that structural shift plus that fundamental catalyst shift. Now, if we get those data reports pointing the other way, such as we have NFP this week. Now, imagine if we get shit jobs numbers, we get unemployment rate rising to 4.4 or higher, then you'd start getting markets pricing those rate cut expectations. But until then, we're still leading on the same sentiment that market is telling us here, which is bearish on gold and it is bullish on ES. Kevin, do you have any thoughts what we just went over?
Yeah, I mean, I'm with you. I'd love to see, the only way I would possibly switch my narrative to bullish on gold would be that shift in the
that
Fed.
Shift in macro. And that's what I'm trying to paint is that shift can occur, but it doesn't just occur out of nowhere. It's clearly have where did that go, man? Trading is horribly. So we clearly have this timeline that we just went through, right? And you could see this timeline was from like start of March, and now it's July. It's almost July. So we're only at 0.4. And in order to get to lower inflation, this is going to take a few months for inflation to start cooling down. So you're going to see that narrative start to get fizzled out, right?
Yep.
Excuse me. What you're going to see is that on the very first report where inflation comes out lower, or if labor markets start to take a slack, the markets will start to price in those cut expectations or lesser chances of a hike, which is the same market impact. It's buys on gold, it's buys on ES and US equities. So as I was saying, be careful. We're in that. We snap back above this range, right? And what we can see is that gold is still attempting to find its footing, and buyers are still holding strong above this price level, right? So just like in 2022, after gold bottomed out, we retested that area like for 3 weeks before gold took off. Right here, 1600. And I remember this being a very valuable lesson for me at the time being, because I was shorting here. And man, these shorts, I remember taking these shorts at these highs, similar to exactly how I took them this time, like in this sell-off. And I remember holding these runners, and some of these runners I would hold for 5 weeks and they would be up 800 pips in 5 weeks. And now you see that happen every session on gold, where gold, like this is 1875 and these lows are 1786. And this is a course of June 2nd to July 6th. That's a month and you have 1,000 pips versus now you get that every daily candle moves that. Every daily candle moves like 3x that. So this was a very valuable lesson to me, because I was anticipating gold to actually go back down to these COVID prices that we had. Like when COVID first started, Fed jumped in right here. This is a date you guys should bookmark in your mind. March 20th, 2020. When the Federal Reserve came in and started quantitative easing, started cutting rates down to near zero and started shifting their policy to support the global economy and the US economy during the pandemic. So I was expecting gold to go down there, but what ended up happening was that we just slightly broke below these lows, found our footing. Gold created that support right here. And then we had the change in sentiment where the market started to price in those cuts, right? And the market started to price in those cuts before we even got the first rate cut at that time. And because markets are forward looking, just like how the markets priced out the Russia Ukraine at these tensions at these highs and then started pricing in rate cuts from here at the April meeting. I forgot what the summit was called, but it was a central bank summit in April 2022. And then markets started pricing those rate cuts before we got the rate hikes, before we got the first hike in May. Now, it's the same fashion, is that gold is at a very key pivotal area. And that key pivotal area tells us that if we start to find footing anywhere here and we start to get oil prices continue to drop, lower inflation numbers, we start to see labor market take a slack, you're going to get that pricing get reversed. And then you're going to see buyers, gold becoming a more one-sided buying market, where there's more one-sided buyers. Just like how we saw one-sided sellers overtake gold and absolutely just run with the trend. When gold is on a run, the last thing you can do is try to stop it. And that goes for both sides, is that when gold has a bid, do not try to short it. And when gold is having those heavy outflows, stop trying to call the bottom. Okay? This is why when you don't understand macro, you know that people will not understand this and then start buying gold technically. And it won't work out, because next thing you'll know is, oh shit, gold's at 3,900, gold's at 3,800, because we actually didn't end up getting lower oil prices or lower inflation, you know? So all of this is dependent on what we see here. Now, drop a 1 in the chat if this is clear on what we're talking about and how you can start to paint a picture in your head about events that are coming up and how those could translate into price action. Excuse me.
Big ones.
Awesome. So next, Kevin, do you want to share your screen for a bit?
Yeah, for sure. Absolutely.
You want to do some stock analysis or any stocks that you're looking for?
Yeah, I mean, you guys know me. I'm a big fan of watching equities, especially when it comes to trading ES and NQ. And we've been talking about the SpaceX. SpaceX is a good one to come back to, especially since it's something hot, something that's very news covered right now. So a lot of retail traders and a lot of new traders and investors are watching it. And at this point, we're sort of getting what I was looking for, which was that dip below the IPO of 150, hit lows of 147, and now it's trying to make its way back higher again. So it's at 164. If we find some strength, we had strength yesterday, but comes back to the whole, where's the volume in this strength? There's no volume supporting the strength. Right over here, you rallied. We had billions of dollars coming into SpaceX. Then we had billions of dollars coming out of SpaceX. Now at this point, what's going on? That volume's much lower. Price is trying to move higher. I want to see this as that one last liquidity grab, that one last buyers come in and say, oh, I knew SpaceX was going to the moon. I'm so glad I bought it at 180, at 200. And then bang, 200 down to $100 a share. That's our max pain area on SpaceX, $100 to $90. That would be a great buying opportunity.
Yeah.
135 is also a pretty strong key level, as 135 was the original IPO price, but because of the accumulation that came in before it released on that day, it came out at 150. So with that being said, 135 is another key level to keep an eye on. With SpaceX, we're at 165 right now, so nothing too major. Apple, we're seeing similar price action than we were seeing on the ES, right? Where we had new all-time high, higher low, higher high, strong trend. And then what did we have? We had some non-farm payroll this day, and we had some continuation of the downside. So Apple's another very strong one to gauge. It has been for years on years now. Microsoft too. Microsoft's a great one because we've been looking at this big area on Microsoft for a while now, and price has been trying its best to find support, but failing, and yet we have yet to break below 340. And Microsoft right now is currently, let's take it from all-time high to where we are right now. An all-time high was just made in July of last year, 37% to the downside. If you were to purchase it, Microsoft, it makes its way back to those all-time highs, 55% return on investment right there. Not too bad. Just remember, if you are looking at something like this for a long-term investment portfolio-wise, you would be buying and you would hold, right? If it dips more, if it dips to 320, dips to 300, you're not selling, you're holding until it comes to those all-time highs again. Never risk more than you're willing to lose. Something I do want to point out, though, look at the volume that spiked up here on Microsoft. That's huge. We mentioned before, Microsoft with S&P 500, with gold, these big spikes in volume is a lot of times where clues will be made in the market. We see this was a big spike to the downside, big selling pressure. We ended up seeing continuation. Now we got another big spike at lows, which resulted in bullish price action. So Microsoft's going to be a pretty nice bit of a telltale for me that if we could get back above that previous day high, back above 380 today, then I'm going to be looking for those buyers to have some strength. And I could still possibly be seeing this as markets positioning themselves higher before non-farm payroll comes out on Thursday and brings us lower. And we'll see. It could always be positioning higher to then run higher on non-farm payroll. So that's Microsoft. That is Apple, SpaceX. Meta is another one that is very clean off all-time highs of 795, down also 30%. We're seeing that percentage. We always cover the 5% on ES. Well, a lot of these stocks and even gold is down 30% from its all-time high. So
I love that. See, that's what I mean, right? You're getting at those prices where it's becoming attractive. And once we get that change in sentiment, we'll be the first to tell you guys it's time to start buying gold. It's happening. The markets are pricing in those rate cuts. I'll be the first, to be like, guys, BTC has probably bottomed. I'm gonna dump 10K into leveraged BTC stock ETFs. That's the fun part of it. So when you start understanding that shift, you're like, dude, this is my time to take advantage of what's been going on in the markets and what's to come. Because when this rally, dude, when we start pricing in that reversal on GC, on gold, and markets start front running it, we got plenty of room to head to 5K. And it's not gonna happen in one daily candle. It's gonna happen just like how this sell-off happened over a course of 2-3 months. Because honestly, I've seen the market runs in these 2, 3, 4 month cycles where you have these narratives holding weight for that time, and then it shifts and people get too attached. So one thing I actually love on gold right now, Kevin, if you mind just throwing my screen up there.
For sure.
I'm always a big advocate on, hey, we need more information. When we don't have enough information, it's hard for me to make a decision. And I don't want to be in a place where I'm making decisions without enough information behind them. Now, one thing I love about gold right now is that we got more information overnight. We knew that sellers attempted to create continue price pushing down and then create a new low, but we bounce right back up. So right now, just like I was saying, we're playing in this 4-hour range, and the better trades are either from these lows or from these highs, and anything in between is just a shit setup that I do not want to take, just because end of quarter, lots of things going on. And we'll write that down right here. First thing is end of quarter. I'll do flow rebalancing, right? End of quarter. And we know that institutions and hedge funds rebalance their flows end of quarter to either remove some exposure or hedge some of their positioning. And that's done by either just removing exposure from the markets, taking profit, right? That's when you see gold start to rebound, or they increase their hedge on a position to hedge against something that they're down on. So end of quarter flow rebalancing, we have that happening. Now we have upcoming labor market data this week. And third, we have upcoming inflation data mid-July. So this is what is currently happening, is that we're seeing that end of quarter rebalancing. Gold is finding its footing. Markets are just doing what the markets are going to do after creating new lows and having an entire quarter where we just sold off, right? Start of the quarter was April. You can see that end of March, which was right over here, March 30th, March 31st. Since end of March till mid-April, we pushed up and created that upper wick on the quarterly candle, or on April's candle, start of that quarter. And then once the sellers were in, you got the entire quarter we saw sells play out. And now we're at the end of this quarter. So if we can maybe get some sort of setup that, and in the meantime we get more information from the labor market data and we start to position ourselves. The point being is that we got more information yesterday that in our current time frames, in our current price action, these are the ceilings and floors that we currently have.
Bless. God bless, man, bro. Give this guy some tea.
I don't need tea, man. I need coffee. Coffee just courses through my veins and blood and keeps me flowing. So
the lab's 80% coffee, guys.
Doctor says we found some blood in your coffee. Let's do a blood test. But so this is the information we got. These are lows and highs, and I love that because it allows me to understand that yes, we're still bearish, and we could just do something like this, and then continue on our merrily way down because we haven't gotten the entire information that we need, that we're talking about here, right? Lower inflation, hawkish repricing, which causes that reversal. So we haven't gotten that yet. So we would just then continue on our merrily way down. But I would want to do that from these key price points that we're talking about. And it's much better to just wait for the end of quarter to finish off. Now, what is it? It's June 30th. We're one day. Like, start of the quarter is next tomorrow. And then the day after that, we have NFP, which is going to give us more information on what's happening with the labor markets. And it's going to point us towards what the markets are pricing in. So I'm not looking to execute some bullshit position just because I see it playing out. I want to wait for that data. I want to be aligned with the higher probability plays. I want to wait for the end of quarter and end of month to finish. Like, I don't want to be a part of it. I've already made a ton of money shorting this quarter. And what I don't want to do is tilt on the last day of the quarter. And then let's say you made $10,000 since April shorting this. Last thing you want to do is lose 2,000 of that and lose 20% of that here, right? Just let it happen. Let the market do its thing. That's why I'm saying let's wait for this labor market data. If you made money on this short earlier this week, guess what? You don't have to take a trade every single day. Anybody who tells you that, dude, like, you really don't have to. You want to trade for the type of trader you want to be 2-3 decades down the line. I don't want to trade for the type of monkey I am right now. I want to trade for the type of intellectual human being with great discipline, knowledge, execution skills, conviction, all of these beautiful gifts that I've crafted over the course of 2 decades. I want to trade as that guy, that type of trader who takes one position, fucks off for weeks, comes back, gold's up 5,000 pips for him, and he's up $7 million. I want to be that. I want to trade like that guy. So all of my trades now have to reflect that, right? When you take on a role of a boss, you have to act like a boss before you become the boss. You have to start delegating. And it's the same thing as when you go to sleep, you have to pretend like you're sleeping, man, before you actually fall asleep. So you have to trade like the type of trader you want to be 20 years down the line. If the type of trader you want to be is someone who takes the move on a quarterly basis and shorts here when he realizes the shorts are in, and shorts here and shorts in, just lets it go, does not take profit until the end of the quarter, man, maybe start exercising that now. Start doing that shit now, because that's how you become. If you want to transition from being a scalper to being more of an intraday trader, like how Kevin and I take these trades, start doing that now. Expand your time horizon. Understand that, hey, you're going to have to give your scalps a bit more room to breathe, because you're playing on an intraday basis now. You're playing on a much larger time horizon where moves don't take 10 minutes. Moves take days to play out, hours, sessions. Like the shorts I entered here post FOMC, They played out by by Friday morning, but because they were fresh sentiment, but the rest of the range played out by next week, a whole week later. That's the time horizon where even I expand mine to, where yes, I took profit here. And even on these shorts, I talked about last week. Remember, last Sunday I took these shorts and I mentioned it that hey, if I just held this position till down here, I would have made more money than I would have when I took profit here and I re-entered here. Like I would have made way more money. I made half of what I made by doing that. So it's like even I have to expand my time horizon and understand that that's not the type of trade that or type of execution trade management that I would have done 20 years down the line. I would have held that because I know it's a clear defined range. But me right now, with things going on, maybe I was like, hey, this is a good decision. This is a good decision for me to take this. But again, that's not fully aligned with who I want to be. So these are things that I need to put into focus now. Yep. Same thing next time. Now imagine you see that, and let's say gold continues falling. Now I'm going to know, okay, the type of trader I am takes that sick execution, positions himself, and then lets it run. Lets it run, comes back end of week, takes profit, puts money in his bank, and moves on. So these things you got to play into the role now. Okay, getting back to it, just looking at gold while we wait for NYSE open. I love that we were like, guys, you don't have to take a trade today. You can stay out. Gold is just doing its thing. End of quarter rebalancing, whip up, down, ping pong. You're getting a rejection from these highs, rejection from these lows. Like I don't want to be in this. This just looks like straight garbage to me.
Right? You really want to force a trade in this, lose your capital? I went over an analogy yesterday in a short that I made, like an Instagram reel, and I said I was going over that in trading, you don't want to be a machine gun. You don't want to be shooting trade after trade after trade. That's how you waste your ammo, and your ammo is your capital. You want to be a sniper. You want to wait for those high probability setups, and you take your shot. You take your trade.
Yeah, absolutely. 100% agree, man. Like it's you have a limited number of decisions you can make in a day. And if you're shooting those ammo out at every little, if you're trying to buy every little pullback gold does, you're going to waste that ammo. Align yourself with the higher probability trade setup and then execute on that, right? I'd even like to see even either we pull back down to these lows in my eyes, or even if we got something like this would be good as well in my eyes. But again, I'm with Kevin. Like I would like to see some sort of retracement, dig deeper before we see buyers jump in on ES.
Yep, I'd love to see real quick. Share my chart.
Kevin, I'll be right back. Do you mind just give me 5 minutes?
Bro, go do your thing.
Thanks, man.
Busy man. This guy's a busy guy. He's taking out a lot of time of his day to come do these market in the morning streams with us. Big W's to nil. Drop that like button for him. We got markets opening in 10 seconds, so I'll be quick. Low-hanging fruit situation again here on NASDAQ. We have a low here. We have a low here. I think markets open here. We get a rally towards the highs. I'd love to see that. I want to see a rally towards the highs. I want to look for a short position today. The shorts have been playing out a lot stronger off the open. Not right off the open, but look, yesterday, great example. 15-minute chart started bullish. Then we reversed around 945. I want to see that similar price action here. We held 30,000 even right here. We're now up to 30,078. I want to see us move to 30,100. Look how small this range has become, by the way. 180 points on the NASDAQ. Yesterday, we were dealing with a 500-point range. So don't be so caught up in this little move. What's going on? What's going on? AUD, NZD. Sure, give us a little bit. We will circle back. So that New York session just opened. So I do want to see how markets react on the S&P and NASDAQ. Perfect. Bullish reaction, just like I was anticipating. Gold also moving higher. Now, I'm a big fan of gold shorts off of this possible lower high that formed. So this lower high was our last lower high before we made lower lows. So if this holds and creates another lower high right here, we're going to be set to move lower towards 39.80. Big drops. Look at that, man. Huge spike on equities right there. Really clean move. Really clean move. I was looking for a pre-market entry, but it just spikes right from 30,000. Looking to see a reaction, 30,100. Take a quick stab at our equity, see how they're trading off of the open. NVIDIA gapped up and dropped lower. SpaceX gapped up and is trying to trade higher. Apple is within its range. Microsoft is small gap up, but struggling. Meta looks like it is trying to move lower from here. It actually broke its previous day low on Meta. Google also pretty weak. So yeah, ideally I would like to see some type of reaction towards these highs on the NASDAQ. Nas is pushing, man, right off the open, just like I said. So we'll keep an eye on that. Be very patient. We could also see where the S&P is holding. And look at this, guys. This is that area I was looking for on the S&P 500 to hold too. Right off of these 74.90s, 74.92 held. Doesn't mean I want to go long right now, right? I still have a bit more of a bearish bias going into these markets, S&P and NASDAQ, especially because the Fed has more of a hawkish tone to it. So be patient. See how markets want to trade from here. We see ES just turned red on this candle temporarily. Could just be a pullback. We see it's trying to hold. And NASDAQ still, look at that, climbing high with NQ. Somebody's asking about the Dow. We could run the Dow real quick. We did cover that before. So the Dow has shown a bit more significant strength than the ES and NQ. So the Dow is growth sector. I would sort of be staying out of the Dow as it's been more range bound, but trying its best to climb higher. We're even getting that divergence right now too, where the Dow is moving lower, which is making it harder for ES to move higher with NASDAQ. So as many of you know, ES and NQ tend to trend together, but when we see this type of divergence where ES is struggling to push green while NASDAQ is flying, it's usually due to a weaker Dow or growth index. So there you go. There's a gold nugget right there, guys. Smash that like button for that. Make sure we run that up. NASDAQ getting very close to that area of interest. I marked out 30,188. 187. It's 187 on the undercover clock. Any Snoop Dogg fans out there? ES is struggling to break above VWAP, still trying to hold lower. So I would definitely not be looking for longs on ES. If anything, it is still signaling that, hey, sellers are still trying to be present in the market here. Another climb up on NASDAQ. Now at this point on NQ, I would want us to close somewhere within this area on this 5 minute, push up one more on the next 5, and then reverse from there. I do not want to see price hit that level on this 5 minute, but it looks like it's trying its best. Look at this 5 minute candle right here, guys. 130 points. Very strong move. Very, very strong move. Bang, we're getting there. There it is. There's that price target on NASDAQ. I don't really see any passive sellers up here, so I'm not just jumping in a random short. I'm staying patient, as you guys should as well. And we will see how markets want to trade and react. We got to remember, this is not just that supply area, but it is also this recent pivot that we swept. So check this out right here. So that'll also give us a little insight into where we close in regards to that. If we break higher and we close somewhere up here in the next 7 seconds, I'm definitely going to want to stay patient for shorts. If anything, I would look to see if NASDAQ wants to sweep these highs entirely and then reverse from there. We're trying to get a reaction right now. We are seeing some sellers, but let's see. I think we get one more push up on NASDAQ here. Weighted index is struggling, so we do want to keep an eye on that too. It is below VWAP. There we go. Look at that, man. Look at that NASDAQ sweep. Exactly what we were looking for. Just stay patient. Do not buy these highs. I think this is a big fake out move up here. Doesn't mean I'm going to grab a random short. Going short when we see momentum like this is the opposite of catching a falling knife, right? This is like jumping in front of a trading bus. So be patient. Wait for a reaction. I am looking for shorts, though. I do like we did have a big seller up here. Let's see. If we do try to hold lower, I will take a short on NQ. Entry will be around 30,215. Stops will be above that high. But if we scale above that high right now, no thank you. I'm good. Looks like we're trying to. Buyers are definitely trying to bring us above that level. Sellers are doing their best to defend it. We had a big outlier up there. An outlier is like a big buyer that fails to move in that direction. But let's see. There's that break. We have 340 left in the 5 minute. So because I was looking for a break in reversal, again, I'm not jumping in the first sign of weakness. I'm letting markets react, and I'm looking for confirmation. So this is a bit of a nice move. I want to see us back below 30,217, and I'll take some shorts with my stop near those highs. And we're just trading it back to that range. And we're just trading just like we've been doing, right? We know markets have been very range bound where they give us a spike up and then reverse and bring us that move lower again. Nil's going to be joining us again here. How we doing, bro?
Good, man. I just want to follow up on some comments while I was away. Welcome to Piyush World. If he doesn't respond to his girl, we all know what is going to happen next is why he needs little breaks. All right, buddy. All right, but let me break something down for you, brother. I run a multi-million-dollar company out here as a 28-year-old hustling, right? My girlfriend and she knows how busy I am. She doesn't even wait for my messages. She always knows he's such a hardworking man. He's always working hard for us. So, buddy, I ain't like you, man. I don't gotta take breaks to respond. No, I'm just playing. It's all fun and games.
That's great. That's great.
But yeah, dude, nothing much going on. Gold doing the same old stuff. ES hasn't done that retracement we're looking for. So, dude, guys, this is like a perfect time to just sit on our asses and just do other things in our life.
Yep.
No one's saying we got to be rushing anything into a position. You want to take the more optimal plays. And right now, it's just end of quarter rebalancing. And don't end up rebalancing your portfolios and your trading accounts, rebalancing them back to zero because you ended up over trading on the last day of the month, last day of the quarter.
Yeah.
Okay. So exactly what Kevin's saying, we got to exude that patience. We got to chill out a bit. We got to wait for that proper positioning. We don't want to rush into anything that's going to cause us to have a loss or just remove profits from our accounts on the last day of the month. And I know I've been there. So I'm speaking from personal experience. Everything I say is my personal experience. Okay, so I'm not saying things that I've never done. I've blown accounts on the last day of the quarter, the last week of the quarter, because these rebalancing moves happen. Yes, it's not happening as aggressively on gold, but I have seen those moves where they completely wipe out accounts, dude. Just look at the last sell-off on gold. As soon as end of the quarter hit, in the last week of the quarter, look how massive that rebalancing was. Gold went from 4,200 to 4,800. That's 6,000 pips in just a matter of 1 week. That's a lot of price movement and activity that happens on the last week of the quarters. Markets start, hedge funds and institutions have to reposition themselves. They have to rebalance their flows. They have to hedge their positions, remove exposure from one play, right? So let that happen. The markets are endless opportunities. Just like life is abundant, it's sunny. There's always good things going to happen to you if you just focus on the positives. You know, you got to be like a butterfly or like a bee. That's a good analogy. Here we go. I love these analogies, you know, because it really breaks it down for the audience.
Yep.
You got to be like the bee. You got to go from flower to flower, enjoying the pollen, you know, the nice summer day, sun is shining. You don't want to be like the fly who just goes from a pile of shit to the next pile of shit and just flies around smelly, right? You want to be taking those great plays in the markets when they present the opportunities. You don't want to be like the fly that's taking the shittiest setups, trading for $10 and just getting minuscule profits and taking maximum losses.
Yeah.
We want to be like the bee that's just taking the best trades. Kev, somebody asked, are you in NAS already?
Yeah, so I'm going to try it here, a little light size on the shorts. I'm not a huge fan of the price action we're seeing up here, but we did see the reaction I was looking for at this 30,218. So I'm going to take a stab on it. Very light size. We know momentum has been very strong. If it does fail, we're going to be looking more so for the divergence to play out, right? And the divergence I'm talking about is ES failing those highs. So ES still showing a bit more weakness there. NVIDIA still looks ready to hold weak. So just a matter of patience, trying to short the highs, buy the lows, knowing that we're very range bound. So I don't want to be buying the highs. So I'd rather be in these shorts.
Yeah, that's a good play. Good play. I'll just be careful of the bit of the continuation. I'm anticipating a little bit of a pullback, but I do know that if this continuation happens, man, like it's going straight. ES,
I know.
ES, we're going to 57.70. Somebody asked, I thought Anand is from India. I am Indian, brother. I was born in India. I moved to Canada with my family when I was 6 years old. I grew up in Canada. I go back. I can speak fluent Hindi. If you guys want a Hindi market in the morning, I'll 100% do one too.
There we go, bro. We'll have a Spanish, a Hindi, and
yeah. I'll do it. One of those days, Kevin would just, I would just respond to Kevin in Hindi.
Yeah.
You'd have to figure it out, honestly.
Yeah, I'll pretend like I know what he's saying. It'll be a good stream.
Yeah. Kevin will just be like, "Yep, same idea."
Yeah, for sure. That's me too.
Man, you know what? This was a missed opportunity for me yesterday. I did not see this happening. Like I had it mapped out. It came down to the area I was watching, went a bit below, and I went to recap on it because what I like to do is like at the end of the day, I like to go through my performance, and this has made a key difference for me is that even recording just a recap for yourself for 3 to 5 minutes of how your trading day went, screen recorded with your voice. And it could just be like 3 to 5 minutes where you break down the best move of the day, what you caught, where you messed up. And then before you go into the next session, you rewatch it. So the next morning you rewatch it. So what ends up happening over the course of the year is you build a catalog of your best moments, your worst trades, and then you can start. And then what you can do is a lot of these screen recording softwares will have your transcripts available, right? When you export your video, connect that to Claude, have it go through all your data, what you have said. Because what I personally figured out is that when I'm able to talk in a webinar, I'm able to get my thoughts out better than if I'm just writing things down. Or if I'm typing in notes. So have Claude go through it. You'll know what your best mistakes are. Plus, when you rewatch it, you spend 5 minutes rewatching your recap from the night before. You'll be more prepared. You'll be more alert on the mistakes you did. It'll be at the forefront of your mind. You'll also know what is the great things that you did, and you'll keep that at the forefront of your mind. So I used to do that a lot, and I still do that. But the point is that you build this catalog of your best moments, your worst trades, and it just becomes easier to identify when you shouldn't be in the markets. Oh, this is a mistake I previously made, so I'm not going to do it. I know that end of the quarter, I always used to mess up. So I'm not going to be trying to force anything end of the quarter. I much rather wait for these key price areas that are going to be more interesting, right? Especially after taking a break even and taking a bit of a loss. I'd rather just chill out. Like I'd rather take a $2,000 loss this week because I've ended up making like 20K over the past 2 weeks. So like, that's fine. Like, I'm just going to chill out, wait for the new week and attack again. We're not out here making millions on shorting this. We're very realistic with how we trade. We're very realistic with risk. I tell you guys up front, hey, my risk can range anywhere from $700 a trade to $2,000 a trade, depending on where the market is, depending on the setup it's at. Higher probability plays like this FOMC sell-off, which we had the clean range towards the downside, fresh sentiment. I risked $2,000 on that position because I knew the downside was so much larger. So on a 160 pip stop loss, $800 pip trade, you can do the math on that. Versus now, let's say I took this, where was it? I took this sell. I didn't risk that much. On this sell, when I targeted this low over here, all I did was like a $700 risk, which is my lower band. Because I know the market is now reaching these lows. We have we just had PCE sentiment, and now buyers are more likely to step in.
Yeah.
So it's that dynamic risking. It's understanding, okay, we're approaching the end of the quarter. I want to lower my risk exposure in the market. I don't want to give up the profits that I've made on this downside, right? And it's the same thing in when you have these corrective periods, is that if you are better at trend trading and you're capitalizing on these moves, just stay out when the market does something like this. And oftentimes you'll see me staying out when the market does things of this nature, because I'm like, hey, I just want to position myself with the trend because that's where I perform the best. And that's what the market is about, having that ground set of rules for yourself.
Yeah. Very good, guys. I'm getting out of NASDAQ for now, not like in this price action. We're still above that key 30,000 level that I was watching. Said above that, we're going to be bullish. So just keep a very close eye there. Let's see, guys. If you're in here, man, smash that like. If you're here on Twitter, hit the like, subscribe, follow, all that fun stuff.
Kevin, what do you think about BTC, man? Where do you think it's gonna bottom out?
Dude, great question. It's funny, we covered that before you joined. We were looking at Bitcoin and saying how it's great to see it back below we're back below like 60K. I think we're at 58,000 right now on Bitcoin.
Man, dude. Yeah, I'm excited to get that bottom in. You know, like start buying Bitcoin.
Yep.
I think I was looking at
like 50K.
What I did, this was like a great. It's obviously risky. None of this is financial advice.
Oh, no,
none of this is financial advice. Is that you could take when you have these massive retracements in the equity markets, it's on these retracements. You could take like the leveraged QQQs or leveraged S&P U Pro or TQQQ or TSLL. Like these are leveraged ETFs for the underlying asset, in this case Tesla or NASDAQ, and you could get those gains if you're aligned on the macro side and let it run. Instead of putting it into a simple index, you could put it into the leverage index. So what I'm gonna be doing, and I'll tell you guys when I do it, because I love to be transparent and put my balls on the line, because that's what being a man is about. It's having conviction in things you do in life, because those who take risks get the rewards. Those who take risks and try every single day are the ones who get rewarded by God and the universe. So when Bitcoin bottoms out, I'm going to put probably not too much. I'm going to put
5 million.
Yeah, all right. I'm going to put 10K into Bitcoin and into BTCL. This is the leverage 2x long daily BTC ETF. And what that's going to give me is about a 600% upside to all-time highs just from current prices, previous highs, right? And that's going to be a fantastic play. That's a solid 1-to-6 risk-reward ratio, you know? So that's a good play. Where a long-term play, instead of maybe just buying some Bitcoin, where I buy like 0.2% of Bitcoin, along that I'll just put my money into that ETF. Or even what you could do is you know how Mester is correlated to BTC. That sort of play would then, head towards the upside. Ladies, liquor, and leverage. Everybody's got their vices.
That's right.
Well, no one's judging you. No one's judging you, brother.
Yo, I'm waiting on this NASDAQ, man. Give us a red close and I'll take another stab at shorts. But until then, I'm not jumping in shorts again. Buyers have shown strength. 30 seconds left on this 5-minute. It looked so good over here. It started dumping, and then in the last 10 seconds of this candle, we flew. So I'm hoping it's a liquidity grab. 17 seconds left. This candle closes red. We'll give it one more stab. Yeah, it's all about risk management, man.
I bought some DRAM. I more DRAM yesterday.
Yeah.
Yeah, I bought about $8,000 worth of DRAM yesterday. Put in more money into the memory ETF. I'm bullish on this. So I have buys from earlier on in June around 60s, and then I just added some more at 70s. All right, if the AI bubble bursts, I'll take a loss, but hey, you got to take the risk. You got to take the risk.
Risk it for the biscuit.
You got to take the risk in order to make the money. No one's ever made money. No one's ever made generational wealth taking small moves. People who've made generational wealth have played massive chess games and made those moves where they've taken another man's king and taken the kingdoms down. And you got to play these big moves to make the big money.
Yeah.
So it just like this, dude. Think about this, Kevin. All the shorts that we've done over the past, even this is a lesson for us, is that we've called out such crazy plays in the past few months. Is imagine if you and I just held every single one of these.
Right.
It's now when we'll be calling out the same going into when the sentiment shifts towards those rate cuts, and we know eventually it will. And when gold is ready for that buy, that's something Kevin and I will be focusing on. So it's like we're all in this journey together. We're all going through market. We're all understanding what the macro sentiment is, how it can shift, and how it's impacting what we currently trade. And we're attacking, man. And I think that's beautiful. Very rarely do you see a community come together and really come towards putting out proper trade ideas. Like, just look at how many sells we have taken on gold. I remember the sells we were riding here. Every single play we took from here, the large swing plays we took, the sells we took here, over here, the ones we faded out here, we took these sells, we took these ones, man. Endless opportunities in the finance. We took the FOMC sells, post FOMC. We took last week's sells here all the way down. These, like, come on. You can't beat this sort of precision in the markets. And all of this is because we follow macro fundamentals. We understand that gold is bearish, and it has been bearish, and market's been telling you gold's been bearish since the start of the war. So now when I keep that in mind, I know that as long as I'm aligned with the day trading bias, as a day trader and as an intraday trader, I'm going to be aligned on riding the correct movement until I see that shift in structure and sentiment. Until you get that shift in sentiment, which we talked about, where did it go? Dude, I hate trading you for this. Trading you took away my text. Yeah, I can't even find it. Anyway, oh, here it is. Until we get the lower inflation data and we get a slacking labor market, until then, you're not going to see rate cuts being priced in. Until then, gold's going to remain bearish, and you're going to see those outflows continue from very key supply areas.
Yep. How long has everyone been trading? Guys, let me know in the comments too. How long have you guys been trading for? I've been trading for about 6 years now. Nil, how about yourself?
I started about 8 years ago, almost 9 years ago. I spent first 4 years eating shit in the market, 4.5 years eating shit. I think I lost upwards of about $70,000 before I made it all back, made money in the markets. So profitably, consistently for the past 4 years. Last 2 were the ones where I made majority of the money.
Got you. Very cool. Yeah, man. It's all once that turns, guys. And
once it turns, dude, I cannot tell you 4 years into it, me being unprofitable while people around me were gaining profitability, is you have to keep your focus on it. And you have to find out who you are as a trader and your edge. My edge in the markets came from came from intraday trading. I was scalping. Absolutely, man. Dude, I would love that. I would love that. If you did, 100% do it. You could hit us up. We can cross promote it. Yeah. Hit me up. I'll connect you with my team. So 4 years in, being unprofitable, what I ended up doing, which led me to my first year of profitability, being my 5th year of trading, was I transitioned from a scalper to a day trader. And I expanded my time horizon, and I went on that process of completely shifting away from the past 4 years of what I did in the markets, because I was like, I'm clearly not good at scalping. I'm going to position myself as a day trader, expand my time horizon, because I hated. I could not. What I would end up doing, Kevin, is I would wake up, and this was so stupid. I was like a crackhead in the markets. I'll tell you about this. Okay. I'll tell you about my entire story. I started day trading in university. I saw someone who was trading the markets in my lecture. I talked to him. I started trading gold. I got into FX. I was about 19 years old. I ended up failing university because all I did was dedicate my time towards learning the markets. And my parents were like, yo, you got to stop doing this. There's no point. Like, you're going to, because people go off of, your parents always want what's best for you, right? No. And that's something you have to keep in mind. Just because they're telling you not to pursue something, it's not because they don't want you to see you succeed. It's that they want you to be safe. Like, they don't want you to lose all your money. And that's coming from a place of love, not from a place of, hey, they don't want to see you win. So, most people have that narrative. It's like, let go of that narrative, bro. No one really hates you. Like, hey, everybody's on your side. So they're like, hey, just focus on school. And what ended up happening was I dedicated so much time into learning how to trade is that I never went to any of my lectures. And I ended up getting suspended for having bad grades. I'm a smart individual, but I'm very focused with my energy. And when I was up at 12 a.m. to 10 a.m. trading London hours, trading Asian hours, London hours, and then I would sleep from 10 a.m. to 4 p.m., miss all my lectures, and then repeat that for months on end, of course I was going to get kicked out for a year. I get kicked out. I end up working in a sales job for about a year while during that time. And I was still learning financial markets and I was still learning to trade. And this is like 2 3 years into it. And it wasn't until I started working where I went back to university, decided, hey, I already have a software engineering job now. And I was in my early 20s. So I dropped out, started working as a full-time software engineer from home. I started getting that side income coming in, and it was a good amount. It was about like 7,000 a month, right? Which is great. And what it gave me was it gave me less stress in trading, and it allowed me to focus on wanting to become a better trader and understand the craft. Okay.
Awesome.
So here you can even see that this is the types of things that I would do is that I started focusing on these key price levels where I could get those intraday positioning, right? How I started doing it was I started doing it in like 2022 where that rate hike cycle happened, right? Where I was talking about this. And this is what I was talking about. This was like one of my first years of where I made money. Like I actually took money out of the markets at the end of the year where I looked at my profit loss statements and I'm like, holy shit, I actually had a profitable year. It wasn't much. Like I'm telling you, it was not a lot of money. Like we're talking just under $15,000 in a year. But the point being is I went from 4 years of losing money to now having my first year where I had a profitable profit loss statement. Yes, given that I took hundreds of trades, it was not optimal. But the point being that I had my very first profitable year because I completely switched my way I traded. And I was like, hey, I clearly am not good at this. I've been doing this for 4 years. I'm going to start to position myself as a day trader. And even Jeev was like to me, hey, try day trading, bro. Like, you have to be honest with the people around you. You have to have a good community, right? I saw Jeev killing it in day trading. And all I did was follow his advice. He told me, he's like, Jeev's my mentor. As much as Jeev's my brother, he's my co-founder, he's my business partner, he's my mentor, right? He's the one who taught me how to trade the way I trade. He's the one who taught me fundamentals. And then him and I came together and we built one of the greatest platforms in history. And this is an amazing story. And I'm very thankful for all his guidance. And he's the one who's like, hey, try day trading. So that's what I started doing. And that was where I had my first year of profitability.
That's awesome.
So after that, you just get better and better and better and better to the point where last year it was to the point where market had just started taking off. It was Jeev, myself, and my brother, 3 of us working on market every single day. I was working a full-time job as a software engineer. I was making really good money there. And I decided, hey, it's time to leave. So I quit my job, went full-time market. And guess what? I took that risk. And guess what I got after that? Now I have a team of 20 solid individuals who were so passionate towards this platform. Plus, the month I left my job, I had my greatest trading month because I put all my attention, all my focus into it. I put my balls on the line and ended up with so much more profit. So I just want to say, at the end of the day, if you're going through it and you're 4 or 5 years into it, you haven't made money, dude, just focus on what you're doing wrong, get that right. And I'm telling you, man, if you just stay patient, it's going to play out.
Yep.
It'll play out.
Stay patient, do your thing. Consumer confidence came out lower than expected and below its minimum range. Jolts also higher than expected. Below prior, but higher than bank forecast. We shall see how markets want to react. I'm waiting for a pullback on the ES. I'd like 75.13 area for some longs. I do see this as a possible trend off of that data.
Continuation, yep. Above 7,500, it's good, solid. Even like if it comes down to like 74.80, man, I love that pullback, dude. So like you should never beat yourself up for missing trades, but take it as a lesson. Pay attention, This is a lesson to me. I should have been paying attention, but sometimes it happens where trading is a sport where it requires your full attention. I was so busy here. I had gotten off market in the morning. I was in a meeting and I completely missed this entry. And that's fine because my attention wasn't on the chart. If my attention was on the chart, I know myself and I know I would have sniped the shit out of this entry. That my entry is right over here, dude. As soon as we close right back above here, I know that that's my in and my stops are below here and my target is right there, dude. That would have been amazing profit, but that's the lesson, is that trading requires your undivided attention. The moment anything breaks that attention, that undivided attention, guess what? Now you're either increasing your probabilities of that trade going wrong or just not executing and managing that position properly. And that's, in this case, I missed it because I was in a meeting. I wasn't focused on the charts. I had bigger things at hand, and that's fine. Markets are abundant. Opportunity in life is abundant. I know that next week I'm going to get some sort of similar play, or tomorrow, or post NFP.
You got it. 100%. Let's get it, guys. Let's kill it.
Let's kill it. Let's kill it. Yeah, gold, I'm happy we just decided to remain out. Oil is still below those prices. Yesterday, Trump tweeted oil at like 69, below start of Iran denuclearization, and that he's expecting it to continue falling down. And let's say oil falls down, that gets reflected into CPI, and then we see it come. Then we see markets price on the other side of it, right? Kevin, I'm just getting a call. I'll be right back.
Yes, sir. All right, ladies and gentlemen, let's see. NASDAQ ES on a bit of a pullback off the economic data. Nothing crazy. I wouldn't look to short this. So looking to buy the pullback. I was looking for 75.13. It hit 75.15 and decided I'll see you later. So just like Nil said, you know, don't take a trade. No trade is still a position because you're in cash. You're not in a losing trade. I'm not chasing it all the way up here and widening my stop loss and possibly taking a bigger loss than anticipated. Markets want to move higher. That's fine. That makes my pullback entry that much better. Gold, I wanted to see it pull back towards this area and start to reject. Talking about the low-hanging fruit, the stop loss hunts. Right up here, we got people who are short from gold overnight. They're going to get stopped out once those pre-market highs get taken out. They get stopped out. That's my liquidity, right? So be careful, be patient there. Really wanted to see that deeper pullback on ES. Unfortunately, it did not happen. So not forcing it way up here. Gold chopping around, would not look for longs on gold, that's for sure. So guys, something to keep in mind, if you have a trade set up, your pre-market plan is shorts on gold at 40.50 on GC. You're not going long at 40.30 anticipating 40.50 because you don't know when that pullback becomes a pullback. You don't know when that pullback becomes a reversal. And you don't know if we're really going to even pull back to that level to begin with. You could try a long position right here thinking, oh, okay, we're heading towards my level I was looking for. And then it could pull back, stop you out, push again. You try another long, you get stopped out again. And by the time we get to your level that was part of your pre-market plan, you're out. Your account's gone. You reached your daily loss limit, whatever the case may be, and you can't take that last trade. Meanwhile, that last trade should have been your only trade. So make sure you're following your plan and giving yourself that opportunity in the morning to break down markets. Bro, I can't tell you, man. I was in just 2 micros down here on NASDAQ going into market open. I got out because I do not like being in when New York session opens. And wow, that's nuts right there. I'd still like to see some continuation. Doesn't mean I'm buying highs. Doesn't mean I'm selling up here either. Just means I got to be more patient. The dollar, look at this price level we had marked out. This is something the lab mentioned as well. This 101.89, 101.06 that has held on the dollar as major support. Yeah, New York pre-market is scary. Yeah, it is, man. It could do anything it wants. But yo, we were spot on. I said I'm looking for us to get that going. I think Nil's back. You back?
Yeah, sorry, man. Had to get on a quick meeting.
Bro, all good, bro. You're like the Flash with that meeting.
Man, that's the life of being a founder, dude. Like sometimes things come up. Like I'll be at the gym, something will come up. I will have started my workout. I'm like, shit, man, I gotta head out. But yeah, that's a game, and I love it. Keeps me on my toes. Keeps me focused, locked in. When people call me, I know they can depend on me, and I'm there when they need me. So,
oh, that's awesome, man. Yeah, You know, I've worked with a lot of companies over my tenure in this industry, and I got to say, market really puts their people first, and they put their users first, and they really show that they care. It separates a good business model to a BS business model. That's just like, oh, we're here just to post. Like I've worked with, I'm not going to name drop anybody, but I was working with this other big company, and you could almost notice that like their social media posts, how they post things and present things, that it's just people there just doing their job. They don't care about going viral. They don't care about making an impact. Everybody here at Market takes that initiative, goes
You've
that
seen it,
extra
right,
mile.
Kevin? Like you've seen it. Even Kevin, it's like
Yeah.
it's an infectious energy where we take the initiative.
Yep.
You know, I love it, man. And yeah, thank you so much, bro. You're a big part of that initiative. You're a big part of the energy. People who help make market better, who help drive these initiatives like Market in the Morning. And man, you're 100% right. It's I've never seen a great company happen because people just show up, clock in every single day. A
Right.
great company gets made when it's hungry individuals wanting to progress, understanding that hey, if the company grows, we all grow,
Yep.
right? And that's the type of team we are. Is that Kevin knows it, everybody on the back end knows it, all the engineers knows it. That hey, the success of market means it's the success of all of us.
Yep.
Right? We're all brothers here. We're all brothers or sisters on the team. Like no one here is just an employee. No one here is just here to clock in 9 a.m., clock out 10 p.m. 4 p.m. You know, even with like Kevin and I will sometimes do calls in the evening to catch up, have some ideas. Speaking of that, I was supposed to do a call with Kevin yesterday. I got so busy and I totally forgot about it. But we're gonna do it, Kevin. Please remind me. But that's the point of it, is that you want to build an environment where everybody thrives and that everybody knows that they're all a part of something much bigger.
That's it, man.
They're all part of something way bigger than just collecting a dollar at the end of the day.
Absolutely. Absolutely. Yeah, welcome. I appreciate that, man. I'm gonna screenshot that and
screenshot it. Screenshot it. I'll give a thumbs up. Screenshot it right now. Thumbs up. Put that comment back up. Yeah, someone screenshot that. Turn that into a sticker.
That's so funny. There you go.
You guys can meme that.
Yeah,
meme it. I don't care. Anything to get more eyes on market.
That's it, man. That's it.
Yeah, I like the ES play towards the upside.
Yeah.
Again, the entry from yesterday would have been prime for this sort of movement.
Bro, I know.
You know, can't get them all. Can't get them all. Can try, but may not succeed in getting all of them. So
that's it. Here we go. Gold making a run.
Sorry?
Gold making a little run right here.
Yeah, gold's making a run. Gold, I would just like to see it go back to 4,100, man. Honestly, that's the top of that intraday range, and I think price can really head into there. If you're not in buys from that area, like, yeah, you can try to get the squeeze up towards it, but I'm just patient, man. I'm waiting for the end of quarter rebalancing to finish off. I'm waiting for the start of the quarter. I'm waiting for NFP data that's coming out in 2 days. So I didn't get to align myself on those buys overnight. So I'm not in a rush. I'm abundant. I like to, if you're in buys, perfect, dude. If you're in buys, hold those buys. I think those buys can play off into 4,100, 4080s. And that would be an amazing place for you to hold your runners into, right? Take some profit as gold is pushing up here, and then hold those buys into these intraday ranges and then see how price reacts there. Take some profit. Now, let's say, and here's a little tip for you guys, okay? Yep. Let's say.
You want to share your screen?
Yeah. Oh, shit. Oh, my God. I've been moving my cursor like I'm sharing I've been moving around tabs for the past 5 minutes. Like I'm sharing my screen. Right now. Wow. Dude. Sometimes it's just like things like that, you know? Okay, so let's say you guys are in buys in Asian session, right? You broke below those lows.
Yep.
And then you see structure shift. And again, I wasn't even on charts last night, so I didn't catch these. But let's say you're in those buys and you take profit here, okay? Let's say you take profit here. And let's do a modest position size. Let's say if you trade CFDs, you're in a 0.1. So you're up about $750 on this trade over here, and you risked $230. Solid risk reward, 3.19 risk reward. Okay. Yeah, not enough caffeine, clearly, right? Yeah, this guy, This founder is slacking over here. So let's say you're in these buys, right? What I would do is I would hold the runner. What would end up happening to that runner? Let's say you held 20% of that position and it goes up to here. And then what you're anticipating is, oh, hey, gold is bearish. So I'm actually looking for this sell idea where I can take that sell from up there. What I would do is that whatever that runner is up, let's say it's up $500. You're up $500 or you're up $600 on this runner and you're looking for shorts. I would then, once I get those confirms, I would risk the entirety of that runner on this short. Now, what ends up happening here is that let's say this position gets taken out. Worst case, your runner is still profiting even more now. And now you can let that go, right? This becomes a risk-free trade because you already have this position from the opposite end playing out, right? And then theoretically, what ends up happening is that you'll always have a position or runner playing out. You get what I mean?
Yep.
You get what I mean? And it's the same thing when the markets are trending. When the markets are trending, let's say you held this this FOMC play towards the downside, okay? You held this FOMC play towards the downside. And actually, a better example, I'll show you right here. This is a much better example, and we'll go into the trend, is this peace deal, the announcement of it that, hey, it's almost signed. I took these buys over here. I took these buys because I was like, yeah, I'm looking for sells at around 43.70s, 43.50s. So I took these buys and I held them up till here as majority of my position, and the rest of it I held as a runner. I held as a runner and I risked that runner on this sell play. And this sell play played out on the intraday basis till down here. I took profit. I still had this runner going. That runner eventually got taken out, but I still had the one from here going. So by the time FOMC came around, I had risked the profits when we started breaking below these lows and I took the sell. I had risked what I was already up here. And then this position got stopped out at break even because and then I had this running from FOMC, entered more here. By the time the next week, we entered more sells. So you always have a position technically floating in profit. And that way you can also mitigate your risk on plays like this, where you take the buys from these Asian market lows, where Asian session tried to print a low, you got this push towards the upside. And then now you're positioned looking for sells because you want to align yourself with the actual day trading bias. So now you take those sells here and you just risk the profits that you're up on this position, your 10% position that you held. Now that's the way you can mitigate your risk as well as always keep floating profits running.
Nice. Beautiful, man. Oh man, we're always dropping some gold nuggets. You guys got
No, this isn't martingaling. This isn't what martingaling is. This is like risk mitigation.
Yeah.
This is martingaling. Isn't martingaling where you double your exposure?
I think so.
Isn't that, it's like every time it comes down, like you're doubling your exposure, or am I thinking about something?
Oh, that's like DCA, dollar cost averaging down.
No. That's that. I know what dollar cost averaging is. I'm pretty sure martingaling is every time it comes lower, I'm doubling my exposure.
Okay.
This is just scaling in as well as using what you're floating in profit and risking that, so that if this gets taken out, this position is still running. Yeah, and you're right. Maybe your prop firm doesn't allow this. I'm always talking about experience from my personal trading experience. And I've never traded a prop firm. I'm horrible at those types of rules. I know myself. I'm much better at trading personal capital. I've always been better at trading personal capital. I've always even traded personal capital. I couldn't pass a prop firm in 2020. I passed it before. I couldn't get I can't operate under those rules, dude. Like my sort of trading, I do not like those rules. I know myself. I'm not going to waste money on those types of things. So I rather just trade my personal capital and have that growing and have that compounding. So it all depends on who you are as a trader. I know a lot of people who trade prop firms and they milk them. I have friends who do. I have friends who do disgusting amounts of money on prop firms. And the prop firms pay these guys out because they have to, right? Like the thing is with prop firms, dude, it's a very reputation based game. So if you have a lot of good players, eventually that prop starts losing money. So they're more incentivized to not pay you out. So you always have to keep in mind that you want to be building your personal capital. and you want to be building that personal wealth and putting that money into your bank account. So whether that's you're using your prop firm capital to put it into your bank account first, you build your bank account a bit, and then you start transitioning that money into more personal capital on a nice regulated broker, whatever you trade. And then you shift away from the prop space because you have your own money, and then you don't have to trade under anybody's rules. You don't have to wait for them to process your payments. It's just you and your broker and your bank account. Now that's the environment I want to be in, where I don't have rules, where I can hold a trade past a certain time. I can position myself a few minutes before, a few minutes after data, right? Like when FOMC came out here, dude. And here's the thing, and here's the mess part. I had an appointment, right? So I couldn't be on the charts on FOMC, but I watched Kevin and Imri, and I was driving back. Okay, I saw this move happen, and and here's the thing, man. Like I opened up, I had the market notifications on my phone, and I saw the headline that came out about the summary of economic projections and what they were projecting the rates to be at, and how it was more of a hawkish leaning tilt. And I sold right here. I sold right here on gold. Stop loss above these highs, wider stop loss. I'm like, this is just going to, that downside potential that we have is just way too large. This is a full hawkish tilt. He's going to come out. He's going to play some balancing act game, but the data is pointing towards hawkish tilt, right? So that's what we have to focus on. Kevin, I'm getting called into that same meeting again.
Bro, do your thing. Go do your thing.
Right back, man.
Yes, sir. Yes, sir. All right, ladies and gentlemen, look at this guy. The drop of the hat, man. He's got to take care of stuff. Guys, keep running that like button up. We definitely appreciate all the support you guys give us. S&P still looking like it's trying to hold higher. I would not be looking for shorts. Again, I was looking for a pullback to 75.13 on the S&P for longs. Could very well hold this and just move higher from here, which is fine too. Not chasing longs up here myself. I'm fine with it playing out and me not being in a trade. Gold, I'll also keep an eye on as long as gold does try to stay below 40.67 on GC and possibly make its way back below 40.53. Could be lining up for some shorts. We know gold has more of a short bias. It made new lows during the overnight session too. So just looking to trade that trend there. ES struggling to continue higher. So again, this is one of the main reasons I'm not taking a random trade up here. What's up, Matt? Absolutely. I got you. 100%. 100%. 75.13 is where I'm looking for on ES. Stop would be around 75.10. So I'm looking for a quick dip into there. Nice liquidity grab. All those people that have been chasing longs up here, they have their stop loss. Think of it this way. If you were long on the S&P 500, wouldn't you be moving your stop loss to that recent low? Okay, well, great. Markets love to stop people out before continuing in favor. That's the area I'm watching for us to stop out and then continue in that direction. Yeah, exactly, guys. Save money for your own account, trade some prop firms. I know some prop firms definitely do get very stingy on their rules. Nowadays, though, there are so many different options in terms of prop firms. There's like Tradeify, Apex Trader Funding. Apex notoriously has some of the strictest rules out there. Tradeify is one that I usually recommend people to give a trade a try. Because they do offer instant funded as well. And they also have evals that don't have activation fees. So a few things really leaning more for the buyer, for the trader side. So something to keep an eye on, very important. Gold still trying to chug away higher. This is, again, why I'm not just jumping in random shorts, right? We had this basing candle where it looked like sellers were trying to take control. I didn't just take a random short hoping it would move lower. That would have ran right to stop loss. I'm waiting for price to react and get back below my level that I intended price to react to, and then I will look for a short entry. And knowing I could look at higher time frames, the 30-minute has 9 minutes left. If I wait 9 minutes and we break back below this level, that's going to be setting up for a very nice short position on gold. If I wait that 9 minutes and we close somewhere within this zone, or we even break that level, then I know I did the right thing and I stayed out of the trade. Sometimes the best thing we can do is stay out of the trade. The dollar moving lower. Now, dollar moving lower helps support more bullish gold short term. What we could possibly see is a sweep of these highs like we're getting right now, and the dollar comes to this area of support to reverse. There was data, consumer confidence came out below. Yeah, we looked at that. We had that up when it dropped. Yeah, much lower than expected, which is more bullish on the S&P and NASDAQ given our market information here. Consumer confidence, impact on ES, below, very bullish. So that's why we're waiting for some type of pullback to take those longs on the S&P. If it does continue without the pullback entry, it is what it is. I'm trading with Lucid. Some like Tradeify. Good companies pay you. Yeah, Tradeify is a good one. Lucid's a good one. Gold bullish as well. You know it. NASDAQ, gold, ES. It's funny, man. A lot of times how it used to be was they wouldn't inverse each other, but they wouldn't trend so well together. And what I mean by that is we're seeing this pump, consolidate, pump. And we're getting that similar price action, pump, consolidate, pump, pump, consolidate, pump on ES and NQ as well. So the markets are trading together right now. I'll take a look at our volatility index. Our VIX is currently trading lower. New low of day helps confirm buys for new high of day on ES. So again, I would be looking for buyers to continue at this point. Not a fan of buying high. I do like the 15-minute forward continuation. Could possibly look for a new area to pull back to. If we start scaling higher with strength, I'll look for a new zone to pull back. Markets are always going to give us another opportunity, so don't go chasing the highs, right? Be patient. Let markets come to you. That's the best thing we can do. NASDAQ with some good strength. NVIDIA trying to move higher. Google's moving higher. I'll show you guys equities right now. Take a look at our equities trying to hold up. Microsoft trying to hold. Apple new high of day. That's great. NVIDIA is trying to turn back bullish. SpaceX is struggling. Google's bullish and Meta's bullish. So a majority of our equities are bullish, helping support that more bullish S&P and NASDAQ. There we go. S&P trying to break that 75.32 would be great. Yeah, risk on for everything. A lot of risk appetite in this market. Market makers are hungry, man. They got risk appetite today. Looking for a break of this 75.32 on ES. Give me good confirmation. We're going to see some follow through. Remember, VIX made new low of day. It's good confirmation and confluence that if VIX makes new low of day, ES is going to find its new high of day and vice versa. So if one misses, then we know that that's divergence and we should look for a possible reversal. But here's our 15-minute time frame. We're still looking for the 15 minutes scale above that one. We are good to go. Guys, I think this dude's back again.
Man, it's been a chaotic morning, huh?
Yeah, bro.
Yeah, it's but gold's playing out perfectly, dude. Remember from those the low start of the New York session? Yep. Nice plays, continuation heading towards, this is going towards 4090s again, 4100 on the CFD. Yeah, it's going towards there. So good plays over there. Beautiful. The continuation. Yeah, unfortunately I didn't catch any of these. You know, my stance right now, I'm a bit more on the sidelines. I don't perform well end of quarter time. So if I'm not in these from the lows in Asian session, right, I'm not really chasing this move. It's the last day of the month, and I'm going to exceed my patience there.
Good, man.
So ES is going strong. So if you're in those buys from yesterday, solid. Keep that running. Keep gold going. Right, gold will be that. Yeah, that risk on is going to hold. Key NFP data is going to be on Thursday. Guys, remember, join us on the NFP webinar we're doing. It's a very good training on how to trade NFP with a plan. That's where people mess up. They see economic data and they don't know how to trade it. They're like, oh, I'm just going to stay away. But it's like, if you guys understand what happens, why would you limit yourself from the opportunities? Like, look at FOMC. FOMC came out hawkish, and you saw that repricing happen. And there's so many opportunities during the session, after the session, days after, weeks after. So it's similar with all these high impact data reports. If you focus, you have a game plan, you can attack the markets, you will see how to effectively and efficiently trade data reports. And also you'll know when to stay out, when to defend your positioning, how to, instead of being reactive in the markets, be proactive. have these scenarios, have data scenarios that play out, understand these institutional expectations and how the markets will react. All of this, we do this using market. We're going to show you how market does the heavy lifting. And at the end of the day, you're either going to walk away with the biggest value dump you're ever going to get for free, it's exclusive training, or you're going to walk away with some free market sub. Who knows? You might be one of those lucky winners. So come join us. And man, it's going to be a good time.
There you go. What do you got to lose? I'll put the link right in the description. You want to share your screen again? Go over a little bit of what market's telling us now?
Sure. I got 4 minutes before my next meeting, but absolutely. Let's
sure thing.
Over a bit over.
And we'll be wrapping up the stream shortly, guys. So make sure you guys keep liking, keep subscribing. We appreciate the support. We do this every day. Today's what, Tuesday? So we'll be back here tomorrow with Emre.
Yeah. So just share this. We're heading towards this 4,100 area on gold, as I was talking about. So if you're in these buys, that's somewhere where you could risk those sells, right? You can risk on those sells, but be a bit careful. We're likely to see like risk on until Friday, right? So wherever that goes on gold, maybe we get NFP that points us towards those rate cut expectations, increase in those rate cuts, or decrease in rate hike expectations, and gold continues higher. Where could it go next? But above here, it could go to this area, 4140s, 4130s, and of course we have our higher price points up here as well to watch out for. But these are just some higher time frame and intraday levels that we should be paying attention to right now, because these are the ranges that are most near us. That gold entirety of this week has been in this range, right? Since last week. We haven't broken above here. We have a catalyst coming out, which is that NFP data. And that's going to depend whether gold heads towards the upside up to here, up to 4,200, or whether gold heads back down to these lows. So that's the next data catalyst that's going to show us the next bit of information on where gold's going to head off into. There's the link for the NFP webinar. You can sign up. You'll receive the email with the webinar link. Save it. It's on Zoom. You'll receive the webinar link on email. So make sure you sign up. That's the only way to get it. And keep in mind, every other webinar we've done, we haven't posted online yet. Like the CPI one was such an amazing one. The first one we did was such a banger. Now, this is going to be just as equally as good. We get better and better at delivering the information. And man, we're all about improving. So each one, we raise the standard, we raise the bar. Last one, we had hundreds of people join to the point where Zoom ended up charging us $1 like per person. It ended up charging us per person. We ended up paying Zoom like $2,000 for that webinar, which is so ridiculous because they're like, yeah, you guys went above your limit and we have to charge you per person. So it's crazy that we loved it, even though like we didn't make a lot of money on it. It's just like we just love doing it, man. Like I can't tell you, you know what I mean? It's a part of the game, you know. You live and learn, man.
Yo. Zoom was like, you guys did too good on this. We're gonna have to dip.
Yeah, man. So it's like Zoom does that. But yeah, that's what business is, man. You just live and learn. Trading is you live and learn. But hey, man, I gotta hop off. It's been a great session. And
absolutely
more life to all of us, more blessings. Let's keep focused. Let's keep trying. Always risk it in the markets. You don't want to be the person who doesn't take the risk. I'd much rather take the risk. I'm okay with taking a loss. I'm not okay with sitting on the sidelines while I watch things play out in the way I wanted it to. So always try. Don't be okay with average. Get disgusted with being average, and then dedicate yourself to pursuing greatness. So I'll leave it there. Hope you guys have an amazing day. Thank you so much. It's just Tuesday. We have rest of the week, 2 more amazing streams, Kevin and Imri tomorrow, and then the NFB webinar. Kevin, I don't know if you want to continue this or sign it off. We're
going to be signing off there, guys. Have a great rest of your day. We will see you all tomorrow. Me and Imre will be on. Maybe Nil after Imre. We'll see. We'll see if Nil's trading gold or if he's got meetings. Have a great rest of your day, everyone. Trade carefully, and we'll see you tomorrow. Guys.